constitute like majority of our Indian farmers are smallholder farmers today. So they, hold smaller portion of lands and they struggle with lower profitability, lower productivity, and they struggle to access to the formal credit. But I think initiatives like ULI or initiatives like Agritech are opening up to bridge this gap. And I'm really excited to discuss how we can, make the smallholder farmers more inclusive and more sustainable. So with this, I would like to start with Dhruv. So Dhruv, like we have seen, the rural consumption has been very resilient in the H1 numbers. What do you see in terms of new opportunities opening up, or what do you see in terms of credit demands for this sector? Yeah.
Thanks for this question. Basically, like if we talk about the rural areas, there was a very famous saying that in case you want to see the real India, just go down to the villages. It was said by Mahatma Gandhi, and I believe that for a country like India, the development will only come once the rural part of it, the villages, the people residing there start developing. Otherwise, we think of just focusing on the urban areas and all, and just think of growing them or burgeoning them or putting them on a proliferating growth rate won't help you in a long run. Probably you'll have to give a focus on that. And further, if we talk about the rural ecosystem out here, I think the government has a fair bit of idea and they have done a lot of justice, I'll say, in the last 5 to 6 decades. If I talk about the positive trend that we have seen in growing of the rural economies. So basically, if you see that during 1970 to 71, the India's, if we talk about the GDP contribution or the rural economies were actually spanning upon a range of 229 billion. And if we talk about 40 years ahead of that, they grew up by close to 7 times. That is how in 4 decades, the rural economy have grown. Further, we see that the best period for this economy is to grow have been from 2004-5 to 11-12. So during that period, we have seen that the rural economies were showing an annual growth rate of close to 7.5%. And not only that, the agriculture witnessed growth rate of 4.27. The manufacturing was close to 15-16%. The annual growth rate I'm talking about from 4.5 to 11.12. And the construction close to 11.5%. So if you see in these areas when we talked about that the rural economy has grown at its best from this period, but the agriculture was less than 5%, whereas the services, the construction or the manufacturing sector was close to 11.5 and 16%. So the other sector did actually very well, whereas the agriculture did not do as well as it was expected to. And if you talk more about agriculture, I'll say that close to 55%, 54-55% of the workforce population is engaged into agriculture. And the contribution of agriculture to the country's GVA is close to 18-20%, that is less than 1/5 of the total country's GVA. So it does not make any sense, right? 65% of your population stays in the rural, 55% of the workforce works over there, and then the contribution to the GVA is less than 1/5 of the total GVA's contribution. That's a big question. So then we started introspecting what would have been the reason that sectors like construction, manufacturing took off like this, and the agriculture was into a very bad shape. And there was a very famous saying once again was, if you want to kill someone, drive the blood out of it. If I don't want to kill a human being, I'll have to put a slit over his throat, get his blood out, and he's dead. Similarly, for any business, any system or any subsector, if you want to kill that subsector or paralyze it, stop the finance flow into it. Ensure that they don't have access to finance, they don't have access to banking, they don't have lenders, they don't have, even if they have finance, it's not in a timely manner or the rate of interest are so high that the business dies. That's been one of the reasons that the agriculture sector has not been able to take up because of these challenges. Just one last line to conclude that will make you understand more. In 1970, when we were talking about the employment in the rural areas for agriculture, rural were close to 85%. At 85-90%, it's close to 55% now. So that is what is happening because finance is not available, agriculture is not growing, people have started migrating, there's a lot of urban pressure. Because there's urban pressure, banks prefer doing banking with the urban areas and rather than the rural areas, and the agriculture subsectors are into a very drastic, you can say, fume where they're unable to come out. So that is one of the challenges that I believe.
Thank you, Dhruv, for giving the flavor of rural economy. I think let's dive into some grassroots stuff. So maybe Sasi or Vivek would like to know, like, what are the top hurdles, maybe top 3 hurdles for you or for lenders in extending credit to smallholder farmers?
Hello. I think you have rightly said that if you want to paralyze any sector, just cut the finances and the sector will be paralyzed. When we are going for the rural credit, the biggest challenge is the perception. Because the people living in the rural India, they are more politically sensitive, and the particular segment is more closer to the vote bank in the country, and credit without guarantee or credit without having a culture or discipline will always just like a charity, or directly or indirectly you are encouraging the commercial institutions just to lose their money. And sometimes farmers, women's, they are more sensitive to the, even for the media, for the political classes, even for the anyone who want to be showcase himself or herself pro-poor or closer to these markets. Having a proper credit culture, credit scoring, credit discipline, and how the delinquencies are being encouraged or discouraged. One is through your own customs, rituals, faith, belief, honesty. You are having the way to design your model. And that was the model where microfinance was working since last decades. And the other way is, in case of delinquencies, you are having the legal recourse to deal with it. And when it comes to the poor and rural, I think we don't have limited options on the legal side, and it is more on the emotional funding. That is creating, I think, the real problem. Money is not a challenge. Everyone in the financial ecosystem, they see that market. As of now, almost more than 50 crore small farmers holding is there all across the globe. And more than 200 crore people they are surviving on these land holdings. And that is the actual area where we need to have the financial assistance, financial support, but ecosystem, culture, discipline, that is more important. And how the media plays its role, how the political ecosystem plays its role to create that culture, that is more important. When the funds are available, definitely institutions like us, we feel that the opportunity is there, demand is there, we should serve the base of the pyramid. But government must have to play its role. They have to create that ecosystem that your money is safe, and if it is unsecured lending, definitely it becomes more difficult. And in terms of agriculture, to assess the real cash flow of a particular family, that is always a challenging. To have a banking habit, to develop a banking habit of a particular farmer family, that is another challenge. And to institutionalize it and to take a credit call and to have a credit score, these are the challenges. But hope is there. More than 85-90% people living in the rural India, they are dead honest. They have the meaning of what they are saying, the meaning of the value of their Jaban words, and they honor it. And that's why it is working, still it is working in different parts of the world. But we all have a larger responsibility to play.
Thank you. Sasi, you want to add?
I think Vivek has covered most of the, the sensitive aspects of the space. So I will just jump in more on the product side of it. So I come from a background where we used to do cash flow based crop loans. Basics started microfinance in that fashion. And the majority of the portfolio used to be actually crop loans. It was not a standard microfinance loan at that time. But then today, if you ask me, 26 years down the line, we don't do any agriculture loans. We just do standard microfinance. The reason being, the whole ecosystem has not evolved to the extent that you can underwrite a farmer with a lot of confidence that the loan is safe. One. Second thing is it's properly priced. And thirdly, it is utilized. So all the three things cannot be very well verified. So that kind of made us take steps back and say, hey, let's do standard lending to this segment and let them decide how to use that money. And every rural family we should know, there is no, I don't think you can find a family in a village where they'll say only agriculture. They'll do only agriculture, nothing else. There's usually multiple livelihood activities because agri is a seasonal activity. Hence people do rely on other non-farm or even a backyard enterprises. So when you lend to a family, even for agriculture purposes, they do use that money for multiple Cs. So in microfinance world, we should not see microfinance as a product. It's kind of a methodology where majority of rural borrowers, 50% of microfinance is in India. In India is rural, and of which about 50% of the money actually gets utilized for agriculture. That's not captured very scientifically. Hence we think, I would say, the gap is overstated. Because if quarter of microfinance lending is going to farmers and for, if you're lending in the month of June, July, August, and then December, January, February, you're actually lending in the crop cycles. That's when the demand also goes up in rural India. That's because this agricultural, inputs are bought. So we don't count that. Okay. So if there is 4 lakh crore that microfinance does in private sector, another 4 lakhs is in public sector, which is SHG lending, there's about 7-8 lakh crores. If you take 25% of it, 2 lakh crores actually is going to that. I don't have a evidence to prove that, but I can just make an estimate because from my own data, there's about quarter of the money is actually going to it. So I think that's one point of it. We should understand that there are different methods that are being used to provide access to these families, but when it comes to specific utilization, specific purpose, are you doing really agricultural working capital loans or investment loans? Then it comes to data, it comes to the proper risk management, of course, political interference. There are many other things that will keep us away from, actually making that statement boldly that, hey, we are actually lending smallholder farmers because smallholder farmers are subject to so many risks which are very difficult to underwrite. So, yeah, that's my added point.
A small follow-up, Sasi. So, how would lender navigate this, like a situation wherein a lender has to put in money in a proposal wherein participant itself is finding unattractive? Like we are seeing youth is finding agri unattractive and they are moving away from agriculture. So how do you, this is a very unique proposition. Usually a sector would register a growth and ask for a funding, but here the participant itself are moving away from the agriculture. What's your take here?
But there are alternate platforms that are coming in the form of FPOs and other aggregation platforms are coming which are trying to aggregate the demand and perhaps also give the bargaining power and hence the pricing and the overall incomes will go up. So I think there are these alternate channels that one can use to make the whole enterprise lending more at an aggregated level rather than individual level. And the smallholder gets benefited, but they're not the direct borrower because it's very expensive to design and lend a product in a fully scientific manner. You do a cash flow based lending to a farmer for a 1 lakh rupee loan. It's never going to be cheap. So one way we say access, another way we say affordability. This is oxymoron as long as a farmer finance is concerned. That's my understanding of 25 years of working in rural India. You cannot give a loan to a farmer at a cheap price unless you have somebody else underwriting and taking away the risk. And hence, mostly public lending has survived because most of it is underwritten by taxpayer dollars or rupees, sorry. But I don't think a private enterprise can do that at a micro, at a retail level. It has to be at a kind of a meso level where aggregation platforms play a big role. That's how I see it. Yeah.
I think thank you so much, Sasi. Maybe Paritosh. So, would like to understand what are some of the ministerial initiatives around agri-stake or the farmer ID, crop registry, etc., which would help extending credit to these segments.
Sure. So while my fellow panelists have raised some very pertinent challenges and painted a very grim picture of the current situation, I would probably take a little more promising view of the future, being in the ministry itself. So one of the things which is happening with this sector is that digital inclusion is increasing. Okay, they have more access to smartphones, Jandhan accounts, digital, banking channels. What it really will do is it will bring in a lot of data, over a period of time. And in order to promote this digital inclusion and hence the financial inclusion, there's a various projects which are undergoing in the ministry. One of them is AgriStack. AgriStack is basically, building a farmer registry. Okay, we need to identify who the farmer is, where its land is, what type of crop it's growing. There's a crop registry in terms of, the entire digital crop survey goes through that, at what stage, what crop they're growing, what stage they are. It is how likely are they to have a good harvest. There's a soil registry, which is also tells you, okay, what would be the yield at some point of time. Now, with these, initiatives, and a lot of startups are now coming into this agri-tech space. Okay, this will only increase what we call as I'm calling is digital inclusion and financial inclusion in the longer run. Yes, the current situation might be a little fragmented, but as we grow this through the curve, it will become, I think, easier for lenders to take that risk. Second thing is that the whole technology has evolved. I was talking to somebody the other day, and so we are using artificial intelligence, drones, and various other techniques to capture this data. So a very simple thing is that whether the farmer has a pakka house or not. Okay, can this be captured through, say, a satellite? So if it's a pakka house, that means, or it has a water connection, or so for an electricity connection, the chances of that repaying increases. What kind of household goods, consumer durables do they have? Okay, so as income increases for these farmers, a lot of these data points will come in picture. So does they have, if they just look into, the typical house of a farmer, is it well maintained or not? These are some of the proxy variables, which can be used either through satellite, drone, images, which may not have it may not be a standard ways to evaluate credit risk, but can have some innovative non-standard ways to evaluate credit risk and things like that. So I do understand that there are challenges which the current lenders are facing in terms of, getting that exposure of risk onto their books. But as a lot of these structured initiatives take shape and mature, I think a lot more players will come in because the volume is there.
Yeah. Thank you so much, Paritosh, for, I would say, balancing the vibe. So, Arun, maybe we would like to know how ULI can, streamline the credit access to smallholder farmers. What is currently available in terms of data on ULI, and what's the roadmap? Maybe you can just brief us about ULI and other RBI initiatives.
Sure. Thanks. Good afternoon, everyone. So we at RBI, it's a wholly owned subsidiary of RBI, and our vision itself is, frictionless finance for a billion Indians. So rural finance, or access to finance for the smallholder farmers, or the agri lending itself, it's definitely an integral part of our entire initiatives. And before I speak about ULI, I think back in 2022, and which I'm sure all my fellow speakers will also agree that the problems in the agri sector, if we look at the KCC, for example, a kind of very important product, the agri ecosystem, and a 3-decade-old product, it continues to have a lot of value addition. But we were doing pilots, in 2022, where, the idea was to see, if there are any kind of interventions that can bring in a change. So we were looking more from a process standpoint, so we worked with a lot of institutions to see how we can break up the actual, from the time a customer puts up an application till the time there is a sanction or, the disbursement that happens. And we were not totally surprised, but, the fact was that, it was largely people and paper-driven process. The turnaround time were very huge compared to, the average for other products in the sector. And then, even a lot of farmers had to go through some, challenges like getting the legal documents translated because they were, residing in the border states, and something like some such issues which will delay the entire, delivery of credit. And more importantly, it was not a kind of STP process. Everyone had to really go to the bank branches or the VC channels to, keep checking on when will they get the, disbursement done to them. So these were the kind of challenges we saw, like, something that we can address, and thanks to the kind of a digitalization that has happened in the last decade and a half in the country, that how it can be leveraged. And so we brought in, like, how the partners who can bring in the eKYC or other services, and more importantly, how the access to the data that is residing at the state departments, like, access to the land records, how that can be brought in through a simplified way. It's not that today no one is doing, but how that can be through a single channel. So that was one of the initial successful pilots that we have done. And similarly, we have done pilots around the dairy sector again. Largely, a similar challenge of not having a visibility on the cash flow. So dairy sector, while there's a lot of demand and has a good contribution to the GDP, but the challenges of not having some visibility on how much each farmer really gets, because the information is not coming from the source. So we have been working on pilots to see at the state federations or unions how that data can be channelized, and lenders can leverage on that because it's coming from the source. So typically that's the thought process on which, earlier the public debt platform for frictionless credit, or, again, launched as a unified lending interface. So today, ULI, we have like around 10 different states where we have integrated with for the land records. And that continues. The idea itself is to expand it to all the states, and we are of course in touch with all the different state departments also. And challenges are there, of course, not in every state. So one is, of course, whether the data is available. Second, whether if the data is available in the digital format, and what is the scope for integrating it, because ULI is completely API based platform. So that's on the land records that we are trying to do, and we have around close to 40 lenders today. In the last 16 to 17 months of pilot, we have seen a lot of institutions trying to make best use of this data. I wouldn't say every product that has been the intervention has happened has gone into STP, but that's a larger goal. There are certain products which typically it's left to the institution how they want to really look at it. They still want a kind of a branch resource to really go and meet the individual or in the enterprise. So that's completely left to the lending institutions. But as we move ahead, ULI will continue to bring in more access to the data. The idea is also that so today, very soon we'll have all the PSUs, private sectors, SMBs already integrated and utilizing it, and we'll have more and more NBFCs, especially from the agri sector, right, to bring in. And the other side of it is also like, from a service providers, we have seen so much of innovation that has happened in the, agri techs, more coming in, like a lot of satellite-based information being brought in. How well the institutions will make use of it is still left to them. We are also in advanced discussions to get integration done with the Gati Shakti, which has a lot of information, which will, I'm pretty sure, will have a lot of contribution to the agri sector, and also with the geospatial data sharing interface, which was launched a couple of months back. So they're working again to bring in more insights, and I'm pretty sure all of this will contribute to simplify. See, one is how we can simplify the process. Second is, what kind of a product customization can be done. Now, you have some very good data coming from the source. The customer well, like as, SATYA and Vivek just spoke, like, there's so much of innovation happening on the delivery side of it. Now, how much all of this can contribute into, product customization? How can the customer benefit from better, interest rates? Typically that there's a lot of, this sector is, there's a lot of risk involved, right? Even from the delivery. So all this is something we expect to be an outcome over a period of time. But yeah, I would say ULI, we are still at a very starting stage. There's a lot of other integrations to be done, and we are working on it.
Thank you so much. So building on this, I would like to discuss the role of SHG and the cooperatives that they are playing in the credit delivery, and how we can strengthen their impact. So maybe would like to start with you, Sasi, first, and then would like to hear Arun's thoughts on how RBI is helping this.
So I will just bring SHGs and JLGs into one concept, because they're all same customers organized in different forms of groupings. And I'll also bring in the point that our colleague Paritosh mentioned about how do you bring other data sources to the fore, right? So that, and then more importantly also the direct data sources that will impact the borrower. I think we have done a few interesting experiments which show a lot of promise in terms of how can we actually convert a lot of these informal transactions or conversations that happen within a JLG, within an SHG, within larger federations, or even with microfinance institutions. So today there is a lot of dependence on people at every step, and Arun laid out that you need to send out a person eventually to know whether there is a farmer, whether there is a farm, whether there is a shop, whether there is a house. To verify all these things, you still need a lot of high touch. And we took a very serious stand that you can actually, in fact, imagine an end-to-end STP lending to a farmer or a rural woman without a human touch. So people is a friction. People is not always a solution. Okay, if you send out a guy there, that person may or may not be doing what you want that person to do. And you don't know until he comes back and reports, and what he reports also is not verifiable in a lot of ways. How can we actually eliminate all this friction and use technology, and more so AI, to replace a lot of these efforts? And that's where the whole interactions that happen within the community and with the lending institutions, if they're digitized. So as an example, you mentioned, if you know the quality of the house, if you know the assets in the house, if you know whether the person is a real person, if you know whether the person is actually showing their house at their shop or their farm and not somebody else, or somebody else cattle for that matter, then you can actually solve a lot of this problem in terms of verifying the authenticity of that particular activity. KYC only verifies a person, but doesn't verify the activity, doesn't verify other things. So can we expand the whole KYC aspect of it, not only as individual, but also as enterprise or a household? So for example, if you are doing an interview with a customer more remotely through a video, right? And a video interview, now today almost, many 70-80% of our customers, at least they have a smartphone in the household, if not at individual level. If you can interact with them and try and capture the data points in a video interview, showing the house, what kind of a house, what is there in that house, can you show me around, when they're talking, how the whole sentiment analysis of that conversation. Today, AGI can throw very, very interesting outputs. If you put a video in a Gemini, Google Gemini, we did that in fact. We did the whole video interview in multiple languages, and we put it in AGI system, Gemini, and we asked it 10 questions, and it gave us such a standard responses that even 10 different loan officers could have given different answers. It standardizes the whole sentiment analysis, it standardizes the whole annotations, it standardizes the whole conversation. And in fact, you can convert that into a score. It's a trust score, you can call it confidence score, you can call it risk score, whatever you want to call it. So we have already done that experiment, and we have seen amazing results in terms of how you can standardize this whole conversation and minimize the role of that person on the ground. And hence the whole groupings that we have done on the ground, the whole community that is there, will then become an enabler rather than the actor in the play. So if we put people as actors, then you have to watch the show. But if they're enablers, they're actually the directors, then the show goes on. Regardless of it's like a OTT. You don't have to have a theater show. You can have one time done, and then 1,000 times you can play it. So technology has that advantage. And I think we should start bringing both the data that ULI brings to the table and the data that you can actually now unstructured data that is all out there, convert it into a structured format, and then use that to underwrite a loan. Between the two, the cost can come down, risk can come down, and then you can talk about the right pricing, which is a bit of a further conversation. So in my opinion, using these platforms, community platforms, using these interactions, put technology on the top of it, and then convert it into some kind of data points, and then use it to lend to a farmer, is a very important intervention that every agri-tech, lend-tech, fintech, whatever, should think about if they are interested in rural communities and farmers. This is something that we are working on. Thank you.
Sure. Sasi, again a follow-up question. What's your take on the rural community, how rural communities are responding to the account aggregator or the eKYC, the technology which is available to the other use cases in the lending. But what's your take on this adoption of this too in rural?
So account aggregator, in my opinion, is a bit of an advanced stage for a rural customer who is still very non-bank
Okay.
dependent in that sense, right? They do use banks for bulk transactions, but not for retail as much. So I would say, you should start with how much digital adoption that we are seeing in the rural areas. That's the first step. Are they even using digital tools? Or are they even, ready to use them? So to that extent, I think we have addressed, UPI has given us a great, foundation in terms of how people can adopt if the product is simple and easy. So even in our microfinance collections, we see more and more people are adopting to digital channels, either QR codes or apps or pin links. People are slowly getting trust and adoption to the rural digital channels. We have to make sure they're secure and all that stuff. Second level is how do we then bring them into a formal system? So microfinance does it a lot. So money is transacted. So you can use a bit of account aggregator to see whether they are even getting some money from somewhere. DBT and microfinance and SAG. SAG doesn't do much of an individual level, but still, I think some data points are there. But they're not yet good enough to underwrite a loan. But they're good enough to understand a person's nature of financial transactions. Very little, but good enough to make an assumption. So I think it's not about the person on the ground, but they are anyway using these different platforms. KYC, of course, is digitized, so I don't think that's a question that has been resolved in a way, unless there's some lenders who are not allowed to use Aadhaar and to the extent that they should, and those are more legalities. But as far as technology is concerned, it works. People are using KYC and eKYC for various reasons. Now it is up to the lenders and the ecosystem builders to be able to use all these data points, because if you like it or not, rural people are getting into digital world. They're not excluded in that sense. They may be getting it slowly, but their entry is a little bit more entry level, if I would say. But that is also a data point that we need to use to be able to understand their risk and their behaviors. It is becoming more and more useful. Yeah.
Okay, thank you. Maybe Arun, your thoughts on how RBI is helping on the SHG fronts and some couple of pilots that you can.
Yeah, sure. So apart from the EOLI that I spoke about, again, SHG, when we have a woman-focused initiative called Swanari, and one of the pilots that we have done was to see how the entire SHG process can be simplified. Again, I would rather bucket it more as a process innovation. Typically the way SHGs are, the women members are onboarded, and the entire process it takes, for the lender to get enough kind of a data, and then subsequently the exposure that they take. All that, again, we try to have a kind of a process intervention, simplify that. One of the biggest challenges, I wouldn't say challenges, but that's the way the model has been operating in the country. But at an individual level, the information was missing. So it was more at a group level, SHG level. So that's one of the kind of outcomes that we expected from that pilot that we were running, and we had some a good successful pilot with Canara Bank, and now we are working with a few other lenders. Again, the idea there is also to see for a lending institution how much of that tech interventions and on the ground can really help them underwrite better. You don't really want a customer who was getting access to credit of some 30,000 rupees 6-7 years back still gets the same amount, because that's a kind of a risk potential that's out there, or that's only exposure that the institution can take has to change over a period of time. That's a power of the data that it can bring in. SAG is one cohort. Ultimately it's the woman borrower. The intent with which she has really gone to the group, the contribution she would like to bring in, and the value that can be created out of it. All that we believe on one side is how well you can create the pipe to bring in more data and access, and second is of course the delivery, which Sasi just spoke about. But yeah, we will continue to have more such pilots, which are focused especially on the agri and of course the women borrowers and the rural tech part of it.
I think a final question, a wrap-up question. So what one key regulatory change or a policy change or one model that you see would be thriving and would be transforming the smallholder finance in next 3 to 5 years? Starting with Dhruv, I think Sasi has already sensed this out, but I think let's see what all has to give input here.
Okay, so coming from down from the government's end, I believe, and I am a firm believer that the private and the public sector both have their own advantages and they have their own level of expertise. So I look forward to a PPP model where basically I think the government is doing its own end with respect to scheme, bringing average stack in place and all. So they'll do the needful. And I'll say that they can do the help in scaling the private sector. So probably some technologies, some operational things can come up from the private sector. Some assistance in terms of scaling, bringing some data on the table, helping them integrate with the private teams, and then putting up some PPP model with the right way of doing this and ensuring that the farmers in agriculture have access to finance at a very reasonable price, which is a win-win situation for the farmer, for the lender, for the government and the entire ecosystem altogether.
Thank you. I think so. PPP model in the government initiatives or DPI initiatives is a theme, right? Paritosh.
I think one key instrumental change is that getting access to all this data which is getting generated. Once this data is publicly available, I'm sure a lot of innovative business models will pop up. Okay. Right now, there's a limitation to this. So data may be incomplete, data may not be accurate. So as the government steps in to create this whole digital ecosystem and access to data to the free market, okay, free access, I think that will change a lot. Second thing is, how do we protect the both parties? So from a regulation point of view, yes, any ecosystem will only thrive when, both the parties in the ecosystem or the multiple parties in the ecosystem thrive. And can we create an ecosystem of regulations or some policies which will protect the borrowers as well as the lenders in the both end? So I think these are the two challenge areas which we need to work on.
So I think consent-based access to data is something that is explicitly being called out. Yeah, thank you. Yeah, you want to add, Sasi, anything?
What I will say will not work because I think you should keep politics outside of government. If it is possible, then a lot of things can be done in agriculture, I would say. But anyway, that's for some other time of discussion.
Okay. So maybe I'll break it into two. One from a RBI's perspective, so definitely the three pillars that we work on, the product, process, and the policy innovation, that will continue. So you'll definitely get to hear more on what are the kind of interventions we do, and of course we take a collaborative approach. We work with a lot of startups, fintechs, tech fins, and a lot of new age, thinking that's going around, in terms of the technology advancements or even in terms of the AI. So that's the approach that we take. And second, on the ULI perspective, yes, it's already a kind of a DPI, approved by the G20 task force. So, and again, we expect a lot of private innovation to happen there. We already have a lot of service providers coming in, adding value to it, and and the platform being a kind of a product or sector agnostic, but still, of course, agri and MSME will be a larger focus areas. But you can certainly expect a lot that is going to happen on the ULI perspective as well. Yeah. I wouldn't really want to comment on the changes on the regulatory side of it, being kind of a subsidiary of the regulator, but definitely, there's a good handshake that's happening in terms of the private innovation and, the kind of a requirement or the need on the ground. So you will definitely get to hear more from us.
Thank you. Thank you so much.
I think co-lending supported with credit guarantees, that can be one way to have cheaper funds in rural India. And if government can, because we are just going by transition nowadays, means for next 5-7 years, it is touch and technology both, means we are investing in manpowers on the other side, we are investing in the technology to have the access of that. Some operating costs can be shared by the government for time being. I think that can be helpful in having funds at a reasonable rate and politically sensitive rates on the ground, means and access to the finances will be easier for everybody.
I think, thank you. That's it.
Thank you, speakers, for sharing your insights. I would like to thank Mr. Nishit for moderating the session. I want to know if audience has any questions.
Hello, hi. Thank you so much for all the insights. My question is to Arun. So lending in the rural ecosystem has a lot of trust deficit. Blockchain as a technology is being known to bring trust to the systems, right? How is it being utilized in the ecosystem from the perspective of RBI?
See again, when we talk about a blockchain or any other technology in place, that's more, from a customer perspective, it's what the lending institution or any other channel, like for example, what kind of a role SATYA plays, right? So the trust building, responsibility lays there in one way. I mean, of course, I do agree, like maybe customer might not really, spend so much of time to understand, what's actually happening at the background. I mean, in the backdrop, but that's where, like, we, of course, that's where I was talking about the private innovation, or how we come in as to bring in the right kind of infrastructure, and which even the lending institutions or the REs can really trust, right? That's where even when we talk about an initiative like a ULI or any other initiative that comes up in the future, we will ensure that the right kind of technologies are brought in, right kind of infrastructure. Even today, maybe this has not been spoken, or we might not have come across, but even for a ULI, there are 3 subsidiaries of RBI who are actively part of it. It's not just about RBIH as an initiative or conceptualize this, but we have Rebet, we have IFTAs, who are actively into this kind of a project to ensure, the kind of a question that you have, so that end of the day, the customer is not really worried about these kind of things, which they don't really have a control upon, right? That's the responsibility of either RBIH or the regulator or the institution. So we will continue to see where all the right kind of infrastructure or the blockchain kind of technologies can be brought in. We have in-house development team, tech teams, which, and also we constantly engage with the REs also to see, where there could be some kind of good pilots that have done, that good understanding that has been there. We would definitely bring into any kind of projects that we do.
Thank you so much, Arun.